For 6 weeks straight, the stock market has been falling with no remorse. And just when we thought we found a bottom for the market reversed and went right back down. But in this video, I want to go over some top setups, some really high quality trade ideas that I have during this really insane environment. So before any charts are looked at, it's incredibly important to go ahead and take a look at the fundamentals of the market. You want to look for where the big money is flowing, where institutions like the firm that I used to work for, where they're putting their money at and how much they're putting into it. Big firms like JP Morgan, Wells Fargo, Bank of America, hedge funds like Citadel, family offices, anyone that has a big position in the market that is speculating, they have to legally report their holdings to the CFTC. And we as retail traders are able to see where the big money is flowing. That way we can trade with the trend and not against it. You can see in the commitment of traders data that the yen, a safe haven asset, was bought 2.29% net change with a net position of now 125,000 long contract. Whereas you compare it like the US dollar with a net position of 7,400 long contracts had a pretty much net change of nothing. Now, something that's a red flag for us to see is the S&P 500. You see that the S&P 500 had a net change of minus 10% with 78,000 long contracts removed and 50,000 short contracts added to the market, bringing the net change to minus 54,000 contracts. NASDAQ got the same treatment here with a minus 5% net change, and their net position is now 8,600 contracts. So now that we have an idea as to where the big money is flowing, let's go ahead and look at the chart and see if it's reflecting what we see. And let's use our technical analysis to go ahead and pick good trades that we can take advantage of, now knowing what kind of environment that we're in. So you see the S&P 500 went ahead and rallied off of this support and then bounced right off of the 200-day moving average, and I marked this as a resistance level. So now I'm very concerned if we go ahead and take out this new low and create fresh zones. I would be very cautious for the stock market, and potentially we'd be in a bear market. The dollar also got the same treatment. You can see that we're in this big range, and the dollar went ahead and also, like the S&P 500, went ahead and tested the 200-day moving average and bounced right off. My positioning changed for the dollar. Before, I was a dollar bull for the year, but because of tariffs and because of all the uncertainty that the market is feeling, my bias for the dollar shifted to the bearish side. So I want to see things that are confirming that move. We see that the dollar went ahead and rejected the 200-day moving average and is now falling. And if you kind of just look, we're potentially getting a head and shoulders pattern on the dollar. Another good confluence is the US 10-year yield, which basically tracks the Fed funds rate for the dollar. Usually a lower 10-year yield means a lower dollar. So knowing the environment that we're in, knowing that we're in an uncertain environment, and you have safe haven currencies like the yen and the Swiss franc that perform well in these environments, and knowing that the dollar is depreciating for now, I want to use those fundamental principles and the technical analysis to form a trade idea. Looking at the dollar yen, it got the same treatment as the dollar index. It bounced off of this resistance, it bounced off the 200-day moving average, and so I want to zoom down into the lower time frames like the 1 hour and see where we can get an entry. This is a trade I took, and so what I did and what I was looking for is we saw this upward trend line here on the lower time frame, and I saw that at 8 a.m. we went ahead and broke that trend line, and what I was looking for was confirmation and follow through. When I saw that price try to go ahead and retest that level and potentially continue the upward movement, I saw that we failed, and when I saw that follow through, I went ahead and jumped in the trade. So I jumped in the trade, and now I am short dollar yen. My stop loss is just shy above the highs, and my first take profit is going to be something like this. Now this trade is short in nature because the average true range on the yen can be triple digits at times. So I'm willing to let this trade run and give it room to breathe with the expectation of this intraday trade going from something like this to potentially targeting lows on the higher time frame. Another trade that I really like is the euro dollar. It also bounced off of support and bounced off of the 200-day moving average on the daily time frame. And if you zoom in, similar to the yen, it went ahead and broke this downward trend line, and it even tested it just like textbook. It broke, retested, and continued upward. So this is what it looked like. I entered around the 07800 level. My stop is just below the lows, and I'm targeting the recent resistance and potentially going all the way up into the 110 level. And if we go ahead and break this 110 level, I am very willing to trail my stops and potentially target the previous highs of the 112 level. Now, an A+ setup is going to be confirmed when the fundamentals and the technicals align perfectly. We know that the dollar is bearish for now, and we know that in times like these, safe haven currencies like the yen and the Swiss franc really dominate. And then when you add the technicals and see that we're bouncing off a resistance, bouncing off of the 200-day moving average on the daily time frame, and you see correlations like the dollar and the 10-year yield following in one direction, that's when you can get an A+ setup and really put some size in and profit from the market. Thank you so much for watching. If you found any value, please leave a like, give me feedback. I want to hear your thoughts. Until next time, have a good one.